Hello again, and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Thank you for all of the great comments on YouTube. Thank you for the support on Twitter. Really been appreciating it. Been enjoying doing these episodes. If you have questions for us, again, we don't focus on individual companies on this podcast. So I appreciate all the questions, but if you're asking for my opinion on X or Y company, I'm not going to give it to you in this channel. What we do in our newsletter is we provide our stock picks and what we feel are the best companies in the space. So if you're interested in receiving a sample newsletter from us, send us an email, support@uraniuminsider.com. You can get an idea about the type of content we provide. And of course, if you're a member, you will get information on company recommendations. With that said, nothing in this video is intended to be investing advice. I am not a financial advisor, and this is not financial advice. Always do your own due diligence when investing, and always take responsibility for your own choices. With that said, let's jump right into the daily scoreboard here. The spot price of uranium ticking down again, mid-market, $38.75 a pound. A lot of people, ourselves included, surprised to see it fall so much from the $52 level. However, the market is ignoring this. Green across the board, with an exception of the Sprott Physical Uranium Trust today. Really interesting price action happening in the uranium space. Speaking of Sprott, the Sprott Physical Uranium Trust, affectionately known as SPUT, was back in the market yesterday, acquiring another 100,000 pounds of uranium, raising another $1.6 million, and ending the day with $12.3 million in cash and a 3.1% premium to NAV. Now, remember, even as the spot price slides down and the Sprott Physical Uranium Trust, U.UN and U.U, is getting hit in the market, as long as they're above that 1% premium to NAV, they're issuing shares into the market and they're buying uranium. So they're doing exactly what they intended to do. And honestly, I'm really loving this price action right now. I'm not concerned about the spot price action. We're hearing that the utilities are quite active in the market. These are discussions that are happening off market for the most part. So they're issuing what's called RFPs, requests for proposal, looking for pounds out into the future. And I think that we're going to see a growing sign of utilities trying to acquire pounds for future delivery to avoid purchasing in the spot market as much as they can, because we can see the type of price action that happens on relatively low volume of end user buying, which Sprott is essentially an end user. While they are not actually using the uranium like a nuclear utility would, they're not selling that uranium. Now I'll get into more of that in today's mailbag question. So since August 17th, when Sputt's ATM went live, they have raised $490.6 million, and they purchased just over 11.5 million pounds of uranium. Absolutely astounding. Turning to the sector ETFs, URA reported an increase in 50,000 shares issued outstanding. URNM reported no change in their outstanding shares. So that's a mandated buying by URA of a negligible $822,000. Not much for URA, but still interesting to see that they're issuing shares. We had, up and down days in that stock over the past couple of weeks, and overall their outstanding share count has continued to increase over that period of time. The AUM between the two was slightly down because of the selling that happened yesterday, probably back up today. Still combined, they sit just over 1.5 billion in assets under management of those two ETFs combined. Again, the trading action, really interesting happening here. Let's take a look at the charts. Starting off with URA, a big green candle today on respectable volume, still down from the past 3 days of trading, have been higher volume. So the huge volumes are not coming back into this ETF yet, but still from a historical standpoint, volumes are very strong here today. Nice to see that big green candle closing out the day at 24.44. Let's take a look at URNM. Similar looking chart overall. I would say it's holding up a bit better than URA. Smaller moves intraday that we're seeing, but still closing the day green. Lower volume for URNM. Let's take a look at the Sprott Physical Uranium Trust. Big down day for U.UN on very respectable volume here. However, looking at this volume, and you can figure 50 to 60% of daily volume, assuming that they are at a premium to NAV of at least 1%, will end up being in share issuance from Sprott. So even though we're seeing this big down day, the share issuance was likely there because we saw uranium ticking down as well. Look at that perfect little touch right on the 50-day right there. Overall, this looks like a pretty substantial and clean correction right at the 50-day, right at some previous resistance. We still have this gap here. Will we fill it? I don't know. If the spot price continues to fall another, let's say $2 or $3, we're likely to fill this gap. In my opinion, that would be an absolute screaming buy for this particular trust, the Sprott Physical Uranium Trust. And honestly, it's probably a great buy right now, even though it's at a premium to NAV. Most people, and if you look at the miners are all green today, and strongly green. CCJ, let's take a look at NextGen. Big green days here on declining price of spot uranium. This is some really interesting price action, you guys. And I think that what's happening is the market is basically expecting this slip in spot price to slow and come to a halt before reversing. And they're playing this as an energy play. They're playing this as an expectation of a seasonal rally. I'm going to talk a bit more about that briefly with concerns to Sprott because of the mailbag question that I got today. Justin, is spot uranium dropping now because Sprott is selling? Okay, so no. So the Sprott Physical Uranium Trust does not have redemptions. So what that means is they don't sell pounds back into the market when they're selling in the trust. They also do not have redemptions. You cannot take physical delivery of uranium as you can with gold or silver with some of Sprott's other trusts, right? So basically what happens is when they're selling in Sprott vehicle, but the spot price is staying stagnant, let's say, for example, what you end up having is just a discount to NAV. And basically the way that reverses is investors will take advantage of that trade by buying at a discount to NAV, because Sprott's goal essentially is to keep that trust pretty close to NAV, pretty close, in as small of a premium as possible, because they want any premium at all to be able to allow them to issue shares to buy more uranium. And the frequently they can buy uranium on the heels of that share issuance and that premium to NAV that is in existence due to investor interest and funds flowing into the trust, that's how they'll keep that close to NAV. So basically what the Sprott Physical Uranium Trust it acts as an end user. Okay, so they're not selling uranium back into the market, and most people are thinking, well, don't they want to buy lower so that they can make greater returns when they sell it? It's like, no, there's no thoughts or feelings around this for them. They've created this vehicle that essentially is a way for investors to purchase physical uranium with very little middlemen involved. So investor funds flow into this, they buy that uranium. Typically, if the volumes are substantial enough, that uranium price will rise, as we saw mid-August to mid-September. If the volumes are low enough, then they're going to be the ones like scooping up, as I mentioned in yesterday's market minute, 100,000 pounds here, 200,000 pounds there. At 500,000 pounds a week, which is way less than they purchased in that first 4 weeks since the ATM went live, they're consuming all of the uranium that's coming into the spot market for production and secondary supply on a typical basis. So just even small volumes on a consistent basis, they're clearing out that spot market. And this is exactly what the trust was set up to do. Now, we're still waiting for that signal for big volumes to come back into the ETFs. We saw it a few days ago, but didn't really follow through. But looking at the price action across the sector, in my opinion, this is retail and some smart money, institutional money starting to position and reposition in these miners with an expectation of this slide in the spot price to stop soon and reversal in a seasonal rally to take place. This is what we're betting on. This is what I think is coming. Hopefully this video was helpful to you all. Again, if you're interested in the sample newsletter from us, send us an email, support@uraniuminsider.com. And if you become a member, you'll receive all of our previous content immediately, including our top 10 focus list picks, including our weekly watch list that I update every Sunday before the market opens on Monday, giving tips and levels to look for in the charts, more in-depth technical analysis, what to look for in the stocks, and some updates on the companies. And of course, you'll be able to attend our members-only webinars that we do once a month with myself and my team. If you're interested, go ahead and send us an email, And again, keep any questions coming, great comments, really appreciate it in the comments below. Like this video, please share this, subscribe to the channel and click that notification bell so you can be notified whenever we release a new episode, which is just about every day. All right, guys, have a great evening. We'll talk to you tomorrow. Cheers.